this opportunity to share with you our learning curve as a multilateral organization after 20 years trying to promote entrepreneurship and risk capital development in Latin America and the Caribbean. As a way of introduction, as Robin said, I work for a special fund within the IADB, the Multilateral Investment Fund, a $2.2 billion fund that was set up precisely back in 1994 to help open up the economies and promote the kind of market-friendly environment where private sector-led growth would bring a lot of investment into the region. Thus the name Multilateral Investment Fund. Well, first, two caveats. I want to first apologize in advance because I've been very impressed by the audience and by the presentations this morning. You guys know 10 times more than I, so it's a good thing that I come with here more to learn. And probably a good part of what I'm going to say might seem obvious to most of you, but believe it or not, it took us a while to learn it. The second is, of course, I'm still very angry with Robin because I know how challenging it is to stand between a person and his or her siesta particularly in such a wonderful environment like Punta Mita. So anyway, I'll try to keep you awake, so bear with me, please. I had the first part of the presentation was about the virtues and of entrepreneurship and venture capital, but of course it would be preaching to the choir. Now your background, your project as a person, the fact that you're here is a living proof that you already know about this. So last night I was trying to see the etymology of entrepreneur. And it's interesting because emprender or entrepreneur comes from imprendere in Latin, which is to take something and put it in, really. No? And when I see the passion that I've noticed this morning in all of the presentations, the passion that leads the entrepreneurs, I think it's actually a good choice of words. Interestingly, in Southern Europe, back in the 15th and 16th and 17th centuries, emprendedor was associated more to the seamen, to the navigators, to the explorers, to people who really wanted to venture into unmapped oceans, not only with risk, but with incertitude. And as you all know, risk and incertitude is not quite the same thing. No? And in the case of these explorers, they didn't even know where they were going to end up, and they were mixing geography and a lot of things. No? But anyway, considering entrepreneurship really as a journey, that's from day one. Our fund is I think it's quite unique in the sense within the multilateral organizations, in the sense that our strategy initially was not to have a strategy, because rather than being some smart guys in Washington second-guessing what the private sector needed, we decided that we didn't want to consider an idea without a partner, and we wanted really to test things and ask us more, why not, even before why, no? And so this is what elegantly is called learning by doing, and we had our share of mistakes, but we have tried along the way to really grow with the industry, grow with the entrepreneurs, try to serve their interests throughout the whole chain that goes from raising awareness about the importance of entrepreneurship to helping young entrepreneurs with their business plans, connecting through social networks, incubators, accelerators, angel investors, the start and seed capital, VC capital, and ultimately leading into private equity or stock market. So what I'm going to do along my presentation is, first I'm going to perhaps emphasize in some minutes why, in words of my boss, so I have to repeat it, President Luis Alberto Moreno, this is probably the decade for Latin America, and why this is, we've been here 20 years, and we've been patient capitalists, and we have suffered with our first harvest of investment funds, we had losses, important losses. But then it really now, and for the reasons that I will try to describe, this is a great time for the entrepreneurship and venture capital in emerging economies, but above all in Latin America and the Caribbean. No? So let's see. I'll skip that part. Latin America is a very attractive market with a very growing internal demand. And let's start with the most important resource, which is people. You know, really, if you see the region has a very enviable demographics. 61% of the population is under 30 years. And what is very, very important for the topic that gathers us today, there's a tremendously expansive middle class. If you take a look into the chart at the bottom left, in countries like Chile and Brazil, you compare 1992 with 2009, and the share of middle class as part of the economy has more than doubled. And that, of course, this middle class not only has a thirst of consumption, but also, since this has been coupled in the last decade in Latin America with very sound economic policies and with the opening of the economies, really this is people who has the right frame of mind and who consider that really entrepreneurship is something essential if Latin America is really to profit from all its growth potential. On top of that, as you know, the region is endowed with numerous natural resources. It has half of the world reserves of potable water, which will be the oil of the 21st century, are indeed in Latin America. So it's 40% of the reserves of copper and gold, 30% of steel, 25% of arable land, that could suffice to really feed the whole world, and a tremendous amount of resources. And again, that's perhaps one of the reasons why the region has weathered so well the financial crisis, and with the sustained price of raw materials and commodities is living through a period of sustained growth. I was particularly impressed by how resilient the region has been to the financial tsunami. I brought this slide just to show how, interestingly enough, not only 10 countries have gotten the investment grade in the region, but if you see the latter four, Costa Rica, Panama, Colombia, and Uruguay, it's been in 2010, 11, and 12. So it's interesting that at a time where the United States, Europe, most of the Western world has gone through a tremendous depression, more and more countries in the region are really having investment grade. And that also translates into sustained flows of foreign direct investment, around $100 billion a year. The flip side is that precisely, and we'll have an opportunity to go over the elements of the ecosystem, because they are not all in place. It's still, when you compare the part of the GDP that goes into credit to the private sector in Latin America, is really, really much below the OECD standards. And needless to say, very little or none, very little of this foreign direct investment goes into precisely early stage equity. We have approximately an equity financing gap of $94.5 billion that would be needed at early stages of investment by the SMEs in the region. And that is one of our challenges, is through VC funds and through other innovative financial instruments, how to serve these needs. Well, the outlook now it's very, although the growth has been softened because of the unfavorable external environment, still the growth will be 3.2% this year and 4% in 2013. In my country of origin, Spain, we would kill for half those indicators today, no? My poor country fellows. Anyway, the inflation is also average, is around 4%. In spite of the adverse conditions, the fiscal conditions are still consolidated at pre-crisis levels. And well, at some point, the monetary policy will have to balance between the sometimes conflicting goals of anchoring inflation and sustaining demand, of course, if the external conditions worsen next year. But overall, well, I think as looking ahead, we still anticipate that the GDP of the region will double in 15 years, which is quite impressive when you think about it. Now, this last paragraph is just to piggyback and to connect with my initial words. These are one of the reasons why precisely entrepreneurship and the kind of innovation and that comes with it is crucial at this stage in Latin America. We still, in Latin America, have low productivity. There's not enough innovation or research and development. And all these elements and all this ecosystem would bring a new dynamic into the region. Last but not least, and I was very impressed when Mike was referring to the hypernet, the next revolution. Argentina has more mobile phones than persons, actually. There's more than one mobile phone per person. I don't know how they do but anyway. And the internet penetration now, I mean, in 10 years, the access to broadband internet has quadrupled in Latin America, from 45 million to more than 200 million. And also the internet penetration is interesting, and so is e-commerce. Still there are, of course, a lot of conditions around, like payments, some kind of environment that doesn't allow e-commerce to grow at the pace that we would anticipate. But this is also very promising in terms of bringing new investment. Okay, we have been talking about the ecosystem. I brought two slides. One for that are actually linked. One is the ecosystem for entrepreneurship, and the next one is for venture capital. I guess that either you have eagle eyes or nobody will be able to read any of my slides, which is good because I can improvise. No. Basically, the elements around the ecosystem are as follows. The first one is the human capital. I mean, what drives entrepreneurship? And I think it's a renovated sense of self-esteem in Latin America. I've dedicated all my professional life to Latin America, and interestingly, for many, many years, no matter, you took any Latin American research paper written by Latin authors, and it would start signaling all the problems they had. We lack this, we lack that, we don't have this, we don't have that. And in a way, I think failure has been overrated in Latin America. I mean, in Latin America, and partly also, I guess we are responsible because in Spain the culture has been very similar, is you only fail once. And if I learned something from the experience of all these gurus of Silicon Valley, I am personally very impressed when people assume risks and assumes failures as part of the learning experience. And when you read the curriculum, probably at some point you say, hey, this guy is resilient because he failed 5 times and he's still here trying the 6th time, and hopefully he learned something and he didn't fail in the same thing in the 5 times. And we'll go over this, but I particularly think that in the case of Latin America, role models are very important. We've been working a lot on trying to promote awareness about entrepreneurial culture, but nothing makes it like seeing a role model that in your environment so that you can identify with this successful entrepreneur and say, hey, if he did it, he made it, I can. Yes, I can. So I think role models are very important. There is also a number here, typically up there on the right, the support services and technologies, incubators, accelerators, accounting, etc. You have all the investors, the early stage financing sources, and that is something that is also only very incipient in Latin America. You have local governments, corporations, banks, business angels, family offices, etc. This part here, the coaching, training, and support, it's critical, and I believe that a lot of interventions is particularly Endeavor. By the way, Endeavor has been is a very cherished and loan partner, and we have co-financed many initiatives together. And it stresses the importance of coaching and mentoring, but also that particular coaching and mentoring is linked to the value chain and is done by people who are really themselves entrepreneurs. And as Daniel Eisenberg used to say, entrepreneurship is addictive. So oftentimes you find that precisely a true entrepreneur wants others to become entrepreneurs, and that's why they make excellent coaches in general and mentors. No? Then you still have to cope with the legal and regulatory environment, and we'll have an opportunity to very briefly go over where are the different countries in the region in terms of this legal and regulatory environment. And I like particularly this little part here, because I think there's a couple of very interesting implications about entrepreneurship that are, and the Tech Monterrey is a perfect example of that, is how the spin-offs, university, business, and also what is called intrapreneurship, what word, or corporate entrepreneurship, which is how do you have a spin-outs or spin-offs within a big corporation. And I was impressed because we commissioned a study by a Korean firm, and even in the United States, you compare the Fortune 500 companies with the ones that were there 20 years ago, and it's amazing how things have changed. And as Mike was saying this morning, we don't know yet what the next generation of companies is going to be. And some of them are, of course, very linked to some of them were spin-offs of corporations. We have a pilot project in the region on that part. So anyway, this is the VC capital ecosystem. There I have to say that we know a little about this because we have, when we started working back in 1996, there was virtually no VC in the region, very few venture capital. There was some private equity, and we tried to be to invest as a minority shareholder in investment funds that would in turn focus on companies under $5 million in annual sales. So we have tried to expand the frontier of venture capital really to companies and countries and sectors where it was completely didn't have access to this particular kind of funding. And we have invested in 67 funds along these years, and strongly supported also the creation of the Latin America Venture Capital Association. So in a way, if I would have to highlight the different elements, the crucial one in this case is the management team. Really, it might sound also again very obvious, but we had some mistakes in the past. We tried to connect U.S. and Europeans and other countries managers with local guys, but where some of the venture capital funds the managers were not in place. They were not even in the country. We teamed up because it was, let's admit it was very difficult to really capture and leverage private sector. So we worked a lot with foundations and institutional investors and other multilaterals. And so really we came with time and linked to our work in trying to help create this industry, we focused really on first-time fund managers. We tried to create capacity at the local level, the profile being typically young people who had worked abroad, who had been exposed to private equity or big corporations, and who wanted to come home with a project, and who had the kind of social network, and also could convince other partners with skills that were complementary. So management team, that's of course in our due diligence, the management team is and will be the fundamental part. But together with that, as you see, there's a connection with the previous ecosystem. You need, in terms of the deal flow, in order for these investment funds to secure a good deal flow, you really need and badly need the rest of the ecosystem to work. I mean, to be able to build up entrepreneurs, high growth gazelles, as they are called in the segment. And also there's aspect of the legal and regulatory framework, particularly when it comes to institutional investors such as pension funds. There's still a lot to do, I believe, in Latin America to open up the investment in VC funds to all kind of institutional investors, and particularly pension funds. So anyway, the weakest link still, frankly, the exit. I mean, sometimes VC is still a marriage without divorce, you know, and it's very rare that to take this to the level that there could be an IPO, there could be a management buyback, but we had, particularly in the last generation of VC funds, very good exits with international investors, but still exit, and it's a key issue when you consider setting up an investment fund. Well, I'm not going to insist. You know, this is the famous J curve and the famous value of debt, the business plan, startup, the company value, and it shows kind of the continuum between entrepreneurship, venture capital, and private equity. Well, now, what is the status of VC ecosystems in Latin America? Well, all rankings and ratings are always unfair, no? And particularly with the developments in the recent years, probably Mexico should be more in the smaller one, in the most developed. No, but clearly, we see evidence in our work, in our daily work, that Brazil, Chile, Colombia, and Peru have the most promising venture capital ecosystems, acceptable legal, tax, and regulatory framework, fund management capacity, etc. No? There is another group of projects, of countries where we would put Mexico traveling into the first one, but Uruguay, Argentina, and Costa Rica, where there's already entrepreneurship is flourishing. There are angel groups starting up, incubators, but we still have the exit options seem limited, and we need some additional regulatory and legal changes. For instance, I believe, particularly in the case of Mexico, the pension funds, the minute it's really the law is approved and they can invest in VC, is going to make quite a dent, and it's going to be very relevant for the development of the industry here. Well, this is just an interesting picture of how is our portfolio distributed. No, this is we had 67. It says 64, but we had three more this week. No, I'm kidding. No. And then we have invested through our funds. We are always minority shareholder. We have invested in 444 companies, and basically the breakdown by country shows that we have a big part of it in Brazil, 30% actually, where we have had, I believe, a very successful story of partnership, public-private partnership with FINEP in a program called Innovar that has really created a lot of capacity at the local level and invested mostly in technological VC funds. Mexico follows with 15.5. Interestingly, we have been very proactive in Central America, as you can see, and when Chile is 7.3, etc. No? Okay. Well, these are some facts of what I mentioned about, it's a little commercial about the Multilateral Investment Fund. The interesting part about us is that our risk threshold is very high. Our donors allow us very risky investment. And also we tailor to our instruments to the needs of our partners. So we have all the range of instruments ranging from donations, grants, I mean, non-reimbursable technical cooperation, to loans, quasi-equity, and equity. Well, this has been this is more referred to our activity linked to entrepreneurship and where we have identified issues in the ecosystem, and this is to show that we have worked both to the bottom, to the far left in entrepreneurship culture, education, but also linking university experts and business on R+D, helping through incubators build up ideas, proving them with sidecar funds and angel investors networks, helping really build, and we are doing that particularly more recently. We're trying to, we just approved a program to support 24 angel investors networks in the region, and I think an interesting element for me at least is that we are training both the investors and the investees. We're trying also to very hard train business angels so that they can better identify good deals, and I think that's going to be very interesting. Well, I would like to, this kind of summarizes what we have done in that part of everything that is related to the entrepreneurship system. No? And we have tried to fill a pioneer gap, experimenting a lot of innovative mechanisms that have to do with high growth and impact entrepreneurship. And these are just some examples on our interventions. We have partnered with Endeavor, particularly on the role model, mentoring and coaching part, and how to engage also the kind of coach that could become an investor and who would actually be doing good by doing well. And then we have worked a lot on incubators and accelerators, and particularly, for instance, in Mexico with Tec de Monterrey. We have small funds in the Dominican Republic, Costa Rica, and Uruguay to fund, to match the investment of angel investors. This is an interesting one that I like very much. It's related with what I mentioned about failure. I proposed to our donors a project that was called failed entrepreneurship, and they didn't approve it. Then I called it re-entrepreneurship, and they loved it, no? Because the idea was it's a second chance. Actually, this is an interesting and intriguing methodology. Se llama Nuevamente. No? If you go to nuevamente.org, we did it with the Banco de Crédito Industrial and with the Business Association in Chile. And it actually it's a little scary because it's a self-diagnosis of whether or not your company is going to go bankrupt in the next 6 months or not. No? So and interestingly, I mean, the application is very simple, but the mechanics of it are complicated, of course. And this bank, BCI in Chile, actually applied it ex post to their SME clientele, and the predictability, and it was amazing, like 85% or something like that. So anyway, this goes to this idea that I want to link this to the idea that you need to work in the whole ecosystem. For instance, we invested as MIF a lot of money on the entry part, trying to do one-stop shops for business creation, reducing regulatory hurdle. But the idea is, even if you reduce the cost to zero, what are the incentives to actually be formalized, and if you have to pay taxes, and if you are not going to get access to finance, access to technology, etc. No? And also, linked to this, it's important to learn to lean failures. I mean, to be able to fail once and save the human capital and the company. It's, you know, like the Buzz Lightyear in Toy Story when he says, "I'm flying," and they say, "No, you're not flying. You're falling with style." No, well, that's exactly what we try to promote, is a kind of environment where entrepreneurs can fall with style and recover and have a second chance. No? So that part of the ecosystem is also interesting. We're working also on corporate entrepreneurship, as I mentioned, open innovation, this idea of that you have to cooperate to compete. And it's interesting how you can share innovation among peers, even if you're competing in the same market, and you finalize and you fine-tune your final product. But that's also another interesting thing. We've been working, particularly in Costa Rica, and we will have a next project in Chile on junior stock exchange. It's having like a special exit mechanism for this kind of ventures. And we also have a lot of projects on knowledge generation. My colleague Nobu, who's here someplace, yes, Nobu, he's working on a research on gazelles, not in Africa, but in Latin America, and it will be published in 2013. And we're also dealing with effects of SMEs on poverty reduction, studying a lot this new password of impact investing, and how do we measure it, and how can we, together with the financial returns, really be able to prove and secure good methodologies to appeal international investors that are interested also in the social returns. The last line refers to some other tools that are somewhat connected to entrepreneurship. That's one of my favorites. We're testing now with a group from Harvard, EFL, a psychometric tool, which is basically a series of tests for entrepreneurs who don't have really a collateral base or assets, and that trying to really work with our bank. The IADB is providing partial guarantees to banks who want to expand loans and provide credit to entrepreneurs based on this analysis of who is he or she, this psychometric tool. No? So that's an interesting one. Okay, so moving forward, I would like to take just one minute to talk about another untapped market, which is women's entrepreneurship. Really, I was really staggered when I learned that only 5% of women entrepreneurs, only 5% of the venture capital worldwide goes to women entrepreneurs. That is a little better in the United States, it's 10%, but outside the United States it's even worse, it's 2%. And only in a recent study that we conducted with high-impact women entrepreneurs in Argentina, less than 1% of them received angel or seed capital, and most of them basically all the financing came from two of the three famous Fs, the third being fools, but it was mostly from family and friends. No? So really women, we were also surprised to see how the little representation of women in accelerators and also with our colleagues and friends of LAFCA, how the number of LAFCA women's in LAFCA, the women's partners and managers is astoundingly low. We're trying now, for instance, with Endeavor, a new project in Uruguay, trying precisely to improve the clientele of women entrepreneurs on high impact and high growth companies. Well, this is where I'm a little candid because some of these are going to look so incredibly obvious to you. So I'll go very quickly and hopefully you will notice. You will not notice. Sustainability. At some point, we're putting sustainability because without attractive financial returns, there are no good stories to tell. And incredibly enough, this looks like common sense, but at some point, all this discussion about the value of death, this idea that you have on the one extreme, the banks who will not be ready to lend to companies unless they prove that they don't need a loan, and on the other extreme, so there's this discussion that there's a public role in heavily subsidizing the financing in this early stage development. We believe that not only, but financial returns are key to this. And otherwise, of course, there will be no follow-up funds and there will be no second or third rounds. We started with very small funds. We basically, everybody knows now, and there was a learning curve, that you need basically the minimum critical mass for VC. Now, we're not talking private equity here, but venture capitalists ranges between $20 and $50 million. No? Then VC is a patient capital. I think one of the reasons we have a name as MIF in the region is because we have been there for better and worse. And so this is a cyclical industry, and it doesn't pay to be opportunistic. You have to really keep a long-term vision. Skills are critical, and that is related to how you select the management team, so I won't go any further into that. The ecosystem, the interesting part is this, you need a holistic approach, and that is one of the most difficult parts of the whole VC ecosystem, is that if you advance in N-1 variables, I mean, you need really, I think it's important that we concentrate and focus first on the terrible, what are the real bottlenecks, or what are the things that really we need to change. But the important thing is that you need to work throughout the whole financing chain, ranging from angel, seeds, early VC, growth capital, private equity, etc. No? Sector specific, we don't like very much sector, we don't favor necessarily sector specific funds, because I don't think it's really, entrepreneurship and VC are not very well matched with the idea of second guessing what are the sectors. Of course, there comes a natural specialization, but we don't have an a priori approach to this. CB is an international business. Bridges between Latin America and other markets are critical. And well, these are some of the lessons. On entrepreneurship, I'm going to just go very, very quickly over some of the things that we're learning. On the one hand, interestingly, we believe that there are new business opportunities at the base of the pyramid markets for low-income population. The conventional wisdom is that you need very big companies like Procter & Gamble serving the base of the pyramid because of the low margins, etc. But you know what? It's very expensive to be poor. When you're poor, everything is much more expensive to you than for a middle-income person. And we believe that closeness to the client and that the process of social innovation, crowdsourcing, all these things can lead to important opportunities for entrepreneurship at the base of the pyramid. I already mentioned that it's important to approach, much like on the VC ecosystem, also on entrepreneurship in an integral manner, the whole system. Incubators, we have very passionate discussions within our organization on to whether or not, how do you reconcile incubators with entrepreneurship? How do you make it so that there is not a perverse selection of the less entrepreneurial ones? How do you make for-profit incubators? And increasingly we're moving, as you know, from the concept of incubator to the concept of accelerator and the importance of the social networking and connecting the companies to potential investors. On business angels, we are trying to promote a more hands-on approach from the business angels. As you know, we're still very early in the process. Many, actually, angel investors don't want to be even identified as angel investors. They, either for security and safety reasons, or because they see this as a hobby or as a... So to professionalize through angel networks, networks, and to really come to improve the tools for business angels and to connect them more so that beyond the actual investment, they can bring to the table their connections and their social capital. It seems to us very important, which links to the next one, which is mentoring. Clearly, I think, needless to say, mentoring is critical, but it should be really linked to people who are still in the workplace, who are really entrepreneurs themselves. And since I said entrepreneurship is addictive, and there is also this growing sense of successful entrepreneurs who want to give back to the society, and also who understand that you cannot possibly have successful companies in failed societies. So it's interesting when you think about it, because there's like an ethic, I believe, revolution by which being manager is much more complicated than it was, by the way, 20 years ago. Then you had to maximize the value for the shareholders. Now you're a corporate citizen. And it's interesting because in Spain, you have what is called Sociedad de Responsabilidad Limitada, which means you create really a corporation to limit your responsibility. But interestingly, now the thinking goes in the direction that the companies themselves have to be responsible citizens. And within the companies, we see more and more a commitment from big family, big industrialists, big corporations in Latin America to promote entrepreneurship. And I think that's a key issue. No? It has also its shadows, which is the next line. Still, family-owned corporate governance is an issue, I believe, in Latin America. No? We find that there's still a strong resistance to open up the companies for international investment, for people, the family-owned business. They want to keep the control. Sometimes they mix what they should be discussing at the dining room and at the board, and the professionalization of the management is still not there. And actually, you trace from very small entrepreneurial systems, you trace all the links to very few actually family-owned companies in Latin America. So governance seems to me critically important. And last but not least, we need to continue the innovation in financial instruments. I was very impressed. I already had a meeting with them in Washington with crowdfunders. I believe that the ability through the media, through the death of distance, the ability to bridge the gap between small companies in Latin America with investors all around the world is probably the most promising way to really moving forward, bring the kind of smart capital that the sector needs. So I think I'll stop there, and thank you very much for your attention. I see you're still awake, so it's a good sign. Thank you.